Hi, this is Kerry Artak with Wicked Stocks bringing you your daily Tesla report for Tuesday, May 21st, 2024. Let's take a look at the charts. I'll start with this chart. This is sort of the big picture, weekly bar chart going back over 4 years. Excuse me. First thing I'd like to say, as I have been, that the 1 year trend remains bearish below 222.22. I know that means nothing for day traders, as it shouldn't, but just so you know, the path of least resistance is downward long term. That's not to say that we couldn't test 222.22 dropping weekly over the coming weeks, and I'll get to that in a moment. Just know that that would be considered a bit of a counter trend rally over the 1 year time frame. And we do have intermediate support at 140.50, and that's worth showing as well. That is a trend line that held the lows about a month and a half ago, could contain weekly lows again. I don't expect it to contain monthly lows as it has thus far on the next attempt. I do think that on the next attempt, this market is susceptible to continuing south to 101.81. In fact, the way I would actually frame this, I'm going to jump to the daily chart, zoom in here a little bit again, but keep in mind this January 101.81 low. Now, of course, we've got 140.50 on the way down as well, but really what I'm trying to say here is if over the next couple of weeks, we have a descending channel bottom that is 3 weeks now in the making, presently at 157.78. I don't expect to see that necessarily over the next week or two, but it is certainly possible. And really, what I want to continue with that point in terms of longer-term bearish continuation, it would be a settlement below 157.78 over the next week or two that would aggressively maintain a bearish continuation as we then move into June-July trade. A settlement below 157.78, I think, would likely yield over the following, 2 to 3 months or less, this 101.81 January low. Of course, you've got 140.50 on the way down, but in terms of just sort of playing the signals, I do think 157.78 is your downward pivot point as we move into June, July. Of course, 140.50 on the way down will probably give the market trouble, but I think the settlement below this, a pretty classic channel bottom over the coming week or two, should then set off follow-through selling, where we could see aggressive selling actually as we move into later June. If you enjoy trading Tesla, it's essential to explore opportunities with the SPY and Triple Q. Widely recognized as top choices for both day and swing trading, these market giants offer significant advantages. Their higher trading volumes ensure tighter bid-ask spreads, optimizing your buying and selling experiences. Plus, as broad market indexes, they're less susceptible to sudden market shifts, making it easier to navigate ongoing trends. At Wicked Stocks, we deliver daily analysis in both the SPY and Triple Q, mirroring the same level of detail seen here on Tesla. Our downloadable daily newsletter provides actionable insights and helps you identify the most important price support levels. Visit wickedstocks.com and take advantage of our 5-day free trial to experience the impact that our SPY and Triple Q analyses can have on your trading journey. So 157.78 is actually in reach over the next week or two, below 175.39. It's a very similar formation, constructed slightly differently, but you could say 175.39 is sort of the channel top to the 157.78 channel bottom. They're different structures slightly, but they incorporate the same time horizons. Now, we did open just above that 175.39 formation on Monday, but we fell away. This is a settlement-based system. A settlement-based buy signal would occur if we close today above 175.39. Then I'm expecting a 1 to 2 week rally to 197.49. So what we have here are these 1 to 2 week time frames that I think are setting up nicely. But in terms of the big picture, in terms of the long-term sweeping moves, nothing is really availing itself at this point in time. But as I said a moment ago, I think that would emerge if we were to close over the next week or two below this descending channel bottom at 157.78. Then I think you can play the short side aggressively as we move into June, July, 101.81 then in reach over the following 2 to 3 months or sooner. Let's get back to the day itself. I want to talk about 166.34 in reach today, holding below the channel top. That is at 175.39. That 166.34 level is that former longer-term channel top that we have closed below and back above. You know, when we start violating these line studies, these classic formations, below, close below, back above, you know, I lose my personal confidence in their ability to contain longer-term selling pressures. But they are still there, and they are still capable of containing solid intraday activity. Maybe even a daily low here at 166.34. And it is in reach today, perhaps below 175.39. Volatility is quite reduced at this point in time, so, you know, it might be a bit of a stretch to anticipate that. But if tested, 166.34, that is a solid day trade level for aggressive day traders in general. And once again, 175.39, assuming we open below it, can be sold today in anticipation of perhaps 166.34. But also keep in mind, I'm talking to you 3 to 5 day, out to you 1 to 2 week swing traders. I don't see a good reason right now to be long Tesla unless we close above 175.39. Until then, if you're short right now off that 175.39 formation, that is actually the way to position yourself if you're 1 to 2 weeks out, because over the next week, 2 at the very most, this descending channel bottom at 157.78 is likely. So long as we continue placing daily settlements below the 175.39 formation. Now let's talk upside, that if we push or open today, now we did open Monday above it, and you know, we eased back right away to close the day below 175.39, but I'll say it again, if we push or open above 175.39, you must allow for the possibility of 184.09 on an intraday basis. And certainly if we were to close above 175.39, I would have a 1 to 2 week buy signal by the end of next week or sooner. And it could be sooner. We need a spike in volatility, which is pretty low right now. But if we close above 175.39, I think you can position yourself on the long side, own Tesla, maybe reach for 195 strike out of the money calls that don't expire for at least, that's a 2 week move at the most. I'd go 3 or 4 weeks out on that expiration just to preserve your delta factor, reduce the theta time decay element. At 197.49, and we're not going to see it today, but we can top out quite possibly into June trade and fall away again. And if we were to close above the 197.49 formation, that 222.04 long-term one-year channel top I started this video with would become our next 2 to 3 week target with present volatility. 222.04, able to contain buying through the third quarter, possibly into later year, because we could fall away from here in the months following to new lows or back to the 101.81 low area. It would be a settlement above 222.22 that would indicate a good annual low and likely bullish continuation over the following 3 to 5 months to a channel top that we haven't shown in some time, but it's in the 320s, 330s right now. It's off these lows against this high. That becomes a 3 to 5 month target if we can close in the coming weeks above 222.22. But first things first, let's close today, for instance, above 175.39, indicating 197.49 within a week or two. Is there anything else to say? I don't think so. I want to remind you that all the minor points are always carefully chosen. They have real meaning. Some of them are trend lines. Some of them are Fibonacci levels. Some of them are highs of lows, lows of highs. But they are all tradable. And I'm speaking more to the day trader, especially the aggressive day trader who may trade off and on throughout the day. I think that's all that needs to be said for Tuesday's Tesla. Please click like, share, subscribe, and check out wickedstocks.com. I'll be back tomorrow with Wednesday's Tesla report. You have a great day.